is Jamie George. I'm Vice President of Insurance for FirstService Financial. Today, I'll be your expert on all things insurance. Together, we'll go through policies every board should be aware of and discuss how to best protect your community when you need it the most. So, with that said, let's go ahead and get started. So the current state of the insurance market, that's a great question, and it is currently hardening. It's hardening, rates are going up, coverage is getting harder to obtain, and coverage forms are dwindling. And so what's that mean? Less coverage, more money. So property-wise, the rates are increasing because we've seen two of the largest payout in claim history, two of the top 5 years, 17 and 18, made it in record history in insurance claim history. That was due to Hurricane Harvey, Irma, Maria, also due to all the wildfires we had, not only in the US, but globally. Insurance is a global market and it's tied to the global market. So it's not just the natural disasters we have here in the United States or in North America for that matter, it's across the world. So the wildfires in Canada, Australia, and such also affect our rates. Reinsurance is also a global market, so all carriers purchase reinsurance. Reinsurance rates have gone up in the 30 to 40% range. So that explains why rates are going up. Liability rates are also increasing at the same amount. That is because it's getting harder to place liability coverage. Umbrella markets are drying up. There's a lot of carriers leaving that space because of the risk, and the pool is becoming smaller. So FirstService Financial partners with broker partners and carriers. So we have partner carriers, partner brokers, and we also work on developing our own proprietary products that are only available to our clients. So between our broker partners, our proprietary products, and our relationships with our partner carriers, we're able to bring the best in class for the best premium available. So this is a great question because there's a lot of brokers out there that will go ahead and give your association a quote, and they can tell you they can quote it, but they don't actually have the knowledge to quote one properly. They don't know what kind of coverage is needed, and they don't know what your CC&Rs call for. So it's really important that you do have a broker that's experienced in this space, that knows how to read CC&Rs, that knows how to cover you properly, that knows how to write a director's and officer's policy, and knows what coverage that comes with. They know whether it has full prior acts or a retroactive date. They know what those coverages mean. They know whether your defense is inside or outside the limit. They know what fidelity is. They know what your state laws are. So there's a lot that goes along with the HOA condominium space that might not be in other risks of insurance. So it's really important that you have an experienced broker in this space. So my team and I typically start 90 to 120 days before the renewal date. And the reason for that being is, number one factor is loss runs. You need to get your hands on the loss runs from your incumbent broker and or any brokers you've had for the past 5 years. Because the current carrier that's going to quote this is going to want to see 5-year loss history. So sometimes that can be a challenge to obtain that, and that can take 2, 3, or 4 weeks to get sometimes, because brokers aren't wanting to release that because they know that you're shopping your insurance and they're wanting to hold on to your business. So with that said, that's when to start, 90 to 120 days. Start getting your hands on those loss runs. Underwriters and brokers are going to need all your property data, the year it was built, any updates you've had, and they're going to need to see those loss runs. Those loss runs need to be dated within that 90-day time period before your renewal date, or they're not going to be valid. They want to see what most recent losses you've had so that they can underwrite the risk properly. The other thing I'd like to let everybody know right now is that starting at that 90 to 120 days before, you used to be able to get your quote, say 60 days before your renewal or 45 days before your renewal. That's not happening nowadays. It's not happening because of the hardening market, because of the rates, because of the ever-changing rating factors that the carriers are implementing. And now we're not seeing quotes till maybe 30 days before your renewal, and it might be more at like the 14 to 21 days before your renewal that you're actually seeing not only your renewal offer, but possibly any quotes that are being provided to your association. So that said, my advice to boards is to, at your 90 to 120 days before, when you're starting to think about your insurance, think about that board meeting date too, when you're going to be able to look at that insurance. That's, say, maybe try and book that board meeting for 14 to 21 days before, so that you can ensure that you have all those quotes in and that you can make that informed decision. So this is one that people ask me all the time, and it's a very difficult question to answer. So my best answer for right now, for today, in the market, in the state it's in, and it's changing every day. These rates are hardening every single day. Coverage is being taken away. Forms are being changed. So that being said, my best guess right now to an association that had a clean loss history, I would tell you to budget for between 15 to 30% increase, because of all the fluctuation in the property rates and the reinsurance rates and the liability rates going anywhere from 30 to 40%. I feel like with the D&O rates and with your crime rates, that a blended rate increase is probably going to be more in the 15 to 30% range. And if you've had losses, it could be more. That being said, I don't want to scare anyone, but I don't want anyone to under budget, because I know that that is the worst thing that you can do for your association, is under budget and be short funds. So again, that said, that is my best number I can give you today is 15 to 30%, and hope that the market maybe changes a little bit, although I don't really anticipate that. But then I always say, if we can come in at 10 or 12, then we've come in a little under budget, and that's always a good thing, rather than being 5% over budget. And that's about all the time we have today for Ask the Expert. If there's any questions that you have that I haven't answered, please feel free to email them to me at letstalk-tx@fsresidential.com. That email address again is letstalk-tx@fsresidential.com. I thank you all so much for joining me today, and I hope you all stay healthy and safe. Have a wonderful day.